Shares of Malaysia's poultry firms gained as the government prepares to end price controls on chicken and chicken eggs and stop subsidies on bottled palm cooking oil from July 1st. At the close, LTKM climbed 5.22% to RM1.21. Teo Seng Capital was 5.19% higher at 81 sen, and CCK Consolidated Holdings rose 5.36% to 59 sen. Leong Hap International advanced 3.88% to 53.5 sen. TPC Plus added 10% to 22 sen. Sinmah Capital jumped 20% to 12 sen, and Lei Hong rose 5.56% to 28.5 sen. Malayan Flour Mills climbed 2.44% to 63 sen. PWF Corporation settled 2.8% higher at 55 sen, and CAB Cakaran Corporation gained 0.97% to 52 sen. QL Resources ended trading unchanged at RM5.10. In a note today, MIDF Research said that the removal of subsidies at the height of elevated global commodity prices would cause food inflation in Malaysia to surge further. It highlighted that food prices rose by 3.9% year-on-year in the first 4 months of 2022, compared to the average rise in food inflation by 2.9% per annum from 2011 to 2019. Should domestic food supply woes worsen, it warned that headline inflation may touch a new peak of 5.8% year-on-year if food inflation surges by 7.0% this year and 10.0% in 2023. The government will provide additional cash aid to the bottom 40% or B40 of Malaysia's income earners under the Bantuan Keluarga Malaysia or BKM scheme. Prime Minister Datuk Seri Ismail Sabri Yaakob announced today the setting aside of RM100 each for B40 households and RM50 each for unmarried individuals in the same income group. He said this was decided after taking into account the cost of living challenges and the recent increase in food prices. This means there will be an additional RM630 million of cash assistance on top of the second phase of BKM payments. Some 8.6 million beneficiaries will be receiving payments in phases starting June 27th, totaling RM1.74 billion. As for the subsidy for cooking oil sold in 1 kilogram polybag packages, the PM said the allocation is maintained at RM4 billion for 2022. However, the government may decide to increase the sum if the prices of crude palm oil continue to rise. Subsidized cooking oil is being sold at RM2.50 per packet for the use of Malaysians under the B40 households. Its actual market price is RM9 per kilogram. Maybank Investments Bank foresees unnecessary issues cropping up in the automotive sector over the next 9 months, on the heels of Putrajaya's midpoint solution as the Sales and Services Tax or SST exemption for new passenger vehicles comes to an end this June 30th. In a note today, Maybank analyst Liao Tongjong said the government's decision to offer exemptions for bookings made prior to July 1st and the 9-month delivery lead time is fair, but it will likely create many unnecessary operational issues. Firstly, he warned, speculative bookings will rise over the next 10 days as many prospective and speculative buyers will take advantage of this decision and place token deposit bookings until the end of this month just to lock in orders. This would skew bookings as prospective buyers can cancel and/or transfer their orders and secure deposit refunds anytime, which poses an unnecessary disservice to salesmen and dealers. Based on that alone, he expects vehicle bookings to hit a supernormal rate in June before falling drastically in the remaining months of the year. Another issue is that some not-so-time-sensitive buyers may place orders by the end of June but could request for a 2023 delivery to improve the vehicle's resale value. He warned that this could result in weaker second half 2022 and strong first quarter 2023 total industry volumes (TIV). The research house's 580,000 to 600,000 units TIV forecast for 2022 are unchanged, pending further clarity on this issue. Tenaga Nasional or TNB has signed an energy wheeling agreement for electricity transmission from Laos to Singapore via Thailand and Malaysia using the existing interconnection facilities. The agreement will be effective for 2 years starting today. The national utility giant said its role under the deal is to transmit energy generated from Laos to Singapore. It is under no obligation to top up any shortfall of energy transmitted from Laos by state-owned Electricity to Laos, which will pay wheeling charges to TNB for its services. The company said the signing of the agreement will not have any effect on its issued and paid-up share capital and the substantial shareholders' shareholdings of TNB, and will have a neutral impact on its earnings over the term of the agreement. Shares in Tenaga ended unchanged at 8 ringgit 18 cent, giving it a market capitalization of 46.84 billion ringgit. Top Glove Corp says it will align its capacity expansion with global demand and supply for gloves. The group said nitrile glove sales volume continues to trend upwards, driven by the sales to the US from Malaysia as well as Western Europe, Asia and Latin America. According to Top Glove's latest corporate presentation, its deferred glove output capacity expansion and lower production by rival glove makers would help ease prices of nitrile or synthetic rubber, a byproduct of crude oil. The group, which has an annual glove production capacity of about 100 billion pieces, said it expects the prices of natural rubber latex to normalize after wintering season ends. Its annual glove output capacity stood at 100 billion pieces in December 2021 and should remain unchanged this year. Top Glove had previously planned to expand its yearly glove output capacity to 156 billion pieces by December 2025. That's unlikely to materialize now that COVID-19 concerns have eased.